there's other things about title we're going over. So Rebecca, how you doing today?
I'm good. How are you?
I'm terrible because you keep telling me I'm wrong, that prices are not going to come down in our area.
It's not going to happen. I wish you were right and I was wrong, but it's just not going to happen. The amount of people that are still migrating is just too high. We have huge numbers still coming.
Now, I know I mentioned to you before, I haven't gotten in, I've heard it from different people, but have you heard anything about they're going to start to put like a 30-day waiting period on people coming from other states and buying and renting, that they're going to have to wait 30 days before they could do that?
Nope, absolutely
So
not.
Just
I don't
talk.
know any reason why that anybody would ever do that. It would just harm the economy, not help it.
What about affordable housing though? It's, people that are working in the area, police, fire, nurses, just regular retail workers can't afford to buy a house anymore.
I hear a lot of talk about trying to implement some affordable housing, but the demand is still high. And I don't see anybody implementing anything. I mean, even the apartments that were affordable are renovating and going higher end. So unfortunately, the answer for those folks, it's going to be difficult. I think you're going to see a lot of multi-generational living, a lot of roommate situations. I mean, unfortunately, in Palm Beach County, there's nowhere to even go. You can go north to St. Lucie, but those prices are going up dramatically too.
I know all over the local news, they have that Priced Out of Paradise. I don't know if you saw that series, Priced Out of
I saw
Paradise.
something about it. Yeah.
And a lot of students too are, you see a lot of students, like you just said, that they can't even find roommates and they can't afford, living. There's a lot of homeless students right now. Well, the cause of that, we all know is what happened over the last 2 years. I mean, currently right now, interest rates, we're in the fives now. So, and I know everybody's in a panic over that, but really pre-COVID, if COVID didn't happen, we might be even higher than we are right now. So that was like a pause there, and they artificially dropped the rates, and now we just kind of took off where we left off. When do you think, so you think housing pricing is either going to level, keep going up, we're never going to come down?
3 more years of rising, and then we'll level.
And then we'll level off. Okay.
Yeah.
All right.
All
right, well, let's start.
Go ahead.
Go ahead.
Talk about who our buyers are. 40% are cash. 40.
I know. And that's the other thing. A lot of listings right now are not even accepting FHA or VA or conventional. They just want cash only.
No,
and
I
they
feel
can do
bad
it.
for people, then that's their only option. I especially feel bad for the veterans. Nobody wants to take a VA loan. Technically, it's just as good a loan as anything, but with the prices rising and properties aren't appraising, when you have that little bit of money down, you're not going to be able to make up that difference. And that seller wants top dollar. And if you're the seller, you can't blame them.
No, if somebody's coming in, going to pay $10,000 or $20,000 more, we're seeing them. I've seen up to $50,000 more and pay cash.
Yeah.
I mean, a VA loan, an FHA loan, a conventional loan take a little longer than cash, but so people know nothing's taking 60 days, even for.
Yes,
we're
that
closing
is
it under 30 days.
absolutely true.
Right.
And that is a misconception that people have had in the past, but that is absolutely not true. It's really about the appraisal issues,
right,
and having more skin in the game.
Yeah, exactly. When an FHA and a VA is putting no money down, now a veteran can pay the difference between the sales price and the appraisal if they have the money. That's the thing. FHA won't allow it. So it's a tough situation when you have all these cash buyers out there. It's hard to, like you said, if someone's going to pay you $50,000 more and close in 10 days, 10 days quicker, you don't even care about the days. You just care about, you're getting more money for your property, which is
right.
understandable.
And that is a strategy that we use. We do show that they do have cash to make up the difference. So that sometimes can help us get those other loans accepted if the
Right.
people have the cash, you know?
Right. If that's the whole thing, is finding out if, how much, I just closed a VA loan, and fortunately I only had to pay 2,000 over, but they agreed to pay up to 10,000 over. So
Mhm.
the appraisal came in 2,000, actually the appraisal came in 2,000 short. They paid the extra two, but they did agree to pay over 10,000 over, the appraised value. So they were going to do that. But that's the whole thing. So that's important for people to know, that on the VA and conventional, if the buyer is willing to and has the funds, they can pay over the appraised value. On FHA, they can't. But
Absolutely.
that's good to know. All right, let's start with our first guest. I'm going to bring Brandon in to the room. Let me find Brandon here. Hello, Brandon.
Hello. How are you doing?
I'm doing great on this Good Friday. I just want to get there we go. Welcome. Now, I had to write your name down. Let me see if I get this right. Ready for this, Rebecca?
Yep.
Brandon Archambault.
It's a strong ch. Yeah, there. Archambault. It was close though.
Archambault, ecreditadvisor.com.
You got
So,
it.
Brandon, how are you today?
Yeah, I'm really good. I'm really good.
Well, let's talk about now is a really important time with people like we were just mentioned, FHA, VA buyers really are kind of not having a hard time to buy. So now is a great time for those people, what I call get mortgage ready, where they'll work on their credit. People have been renting their whole life and just think they can't buy. And that's where you come in. Talk about what you do, what your program does, and what's different about eCredit Advisor than the other credit repair company. Because that's what I always tell people. They mention all these other Lexington Law, this credit repair me, this, that, and the other thing. I said, you got to be very careful of the company. That's why we recommend you. So explain to our audience what you do exactly.
Yeah. So just like you're saying, I'm with a company called eCredit Advisor, and what we are is we're a credit repair or credit restoration company, and we're niched in the mortgage industry. And so what we're experts at is helping people who want to purchase a home or refinance a home, but people who want to purchase a home down the road who cannot currently qualify for home financing because their credit scores are too low. And so, kind of tying into what you were saying in terms of, people getting ready and getting mortgage ready at this point right now, it is important to keep an eye on your credit score. A lot of the resources that are out on the internet where people are maybe tracking their credit score. So for example, if you've got a credit card with like Capital One, you can go into their app, you can see your credit score there, or you can go on to Credit Karma and see your credit scores there, or even Experian.com and look at your Experian credit score. I think what people need to understand is there are multiple different credit scoring models out there. The only way you're going to know your mortgage specific credit score is when you go to a loan officer, have them pull credit for you, and they're going to give you your mortgage score. And so even though you've got an Experian score from Experian.com, that Experian score is different than your Experian score that your loan officer is pulling for you. And so, one of the things that people will look at is, or they'll try to use common sense when they know they've got maybe bad credit or they've got some blemishes on their credit. And so, common sense, and there's a common industry actually, or a saying in our industry, and that is common sense doesn't often make credit sense. And so what happens is people will go and they'll try to fix their own credit, knowing that they've got some blemishes, maybe some collection accounts, that kind of stuff on their credit report. And common sense says, if I go and I just start paying off these derogatory accounts, my credit score will improve, and then I'll be in a position to be able to purchase a home. The reality is a lot of that time that's actually going to damage your credit, because what matters on a credit report is the date of things on the credit report. And so, to kind of give you an example, let's say you've got a collection account 5 years old on the credit report, that debt legitimately belongs to you. And let's say it's $200. And so you have a 5-year-old debt, $200 that's in collections. So common sense says, let me just go pay this account. What'll happen is you'll pay it. It'll show up in 30 days after it updates to the credit bureaus and you've paid that collection company. It'll show up as a paid collection account with a $0 balance. The downside here now is that instead of that debt being 5 years old, it looks like it's brand new again on the credit report with a $0 balance, and it'll actually drop your credit scores. And so the unfortunate thing is that I talk to a lot of people. Every once in a while, I'll talk to somebody, and like the day before I've talked to them, they'll tell me, oh, I just went and I paid all my collection accounts. And that's like, honestly, the worst thing that could happen, because now they've gone and they've re-aged all that debt, they've affirmed all that debt, and then our leverage to challenge those accounts pretty much goes out the window after they've paid that debt. We have to wait till it updates on the credit report, and hopefully we can get lucky with removing it at that point. But a lot of people will end up spending thousands of dollars trying to fix their credit that way, and it's just not the best way to go about improving your credit scores. And so kind of going back to what you're saying too, with what's the difference between our company and some of these other companies out there, number one, we're in an industry that has very low barriers to entry. If somebody goes and they do enough research online, they can have enough knowledge to go and start a credit repair company. The problem is that a lot of these companies are fly-by-night companies, and they're not looking and trying to provide a result for a person. And so they start a company with the wrong intentions. And so a lot of credit repair companies out there, and I won't name names here, but you can go and you can Google credit repair, and there's a couple companies that are come up consistently when you search that term on Google. And it's because they're very, very good at marketing. They're not very good at credit repair. What they're trying to do is to put you in a program, keep you in that program for as long as possible, and bill you in monthly installments, basically until you get frustrated and you quit with them. And so it's not uncommon for us to talk with a client. We'll do a consultation with that client. They'll say to us, oh, I've been with XYZ credit repair company. I've been with them for 2 or 3 years, and my credit scores haven't improved. And I've been paying them $100 a month this entire time. And when we hear that, it's frustrating for us because people just don't know, right? And so the way that our model is different is that when we look at a credit file, we do it through the lens of a lender, and we know what a lender needs to see on credit in order for that person to qualify for home financing. And so we've tied our program to the result that the person's trying to achieve, which means that we've got a score-driven model. Depending on what loan program you're trying to put a client in, JP, you might say to me, hey, I need this client at a 640. They're currently at a 520. What do we need to do to get them there? What I'll do is I'll break down that file, do an analysis of that file. And if I can give you advice on that file, give the client advice. And if there's a pathway for me to say, hey, if the client does this, this, and this, they're going to be in a position to be able to qualify with you. If it's a little bit more involved than that, if it's a little bit deeper and it needs some professional expertise, and then a company like ours to be able to come in and help, what we'll do is we'll put the client into a process, build out a game plan, kind of ad hoc, specific to what they need on their credit file to get their scores up to a point where they're going to qualify with you. And we're able to determine an estimated time frame of how long that'll take based on what's in their credit report. And then I think probably one of the biggest differences is also how we charge on our side too. We actually cap the cost of our program at 6 months.
That's what I like.
Yeah, and we do that for the reason that we're trying to get clients in and out of our program as quickly as possible and back to you so that you can fund the loan. We create kind of a triple win situation: win for the client, win for you, win for us, because we're able to help you fund a loan. And so if it does end up taking us longer than 6 months to get a client up to a point where they can qualify, we don't charge them beyond that point. And so we're really focused on trying to get the client to a point where they can actually accomplish what their goal is, right? Purchasing a home.
Yeah, that's what I like about your program. You put a game plan together. You don't just like the other companies do, oh, we're going to just keep charging you, we're going to do this, we're going to drag it out. You put a game plan together, you put a timeline on it. You even put a guarantee on it, because when you analyze the report and go over it with the customer, you're going to tell them this is not going to get removed. This is going to get removed. This can't get removed. This is what we can do, and not just drag it along like the other companies do. And that's what I like about the way you guys do business. Rebecca, you have any questions for Brandon? They got a really good system. Plus, you guys have the portal. I love every time I must have sent you 5 clients in the last, couple of weeks. Put them in the portal. And that's the other thing too. They follow you. We follow them along. We get updates on where they're going. And the big thing is, that, obviously not everything is guaranteed, but you have a good idea of where you're going to get this, where you're going to get them to. Yeah. And you guys do it right. There's some, I've dealt with credit companies too, where they dispute everything. And you
Yeah.
can't
That's
have a
exactly
dispute.
what I
You
was
can't
gonna
have a
say.
dispute. Yeah, and that's what I'm saying. They know if you dispute something, then you take it out of dispute, right? You were explaining to me one time, if you dispute something, take it out of dispute and then put it back on, it's going to lower their score, right?
So,
Because of the fact that that dispute's not scoring anything.
right. I'll kind of elaborate on that. And to your point, right? And a lot of people don't know this, but from a loan perspective on your side, you can't have any active disputes on a credit report if you're going to fund a loan. So somebody could be at a 680 credit score, and if every account is in dispute on the credit report, it's like, that's not good enough. That's not going to get you a loan, right? What people don't know is that when you go and let's say you're on Credit Karma and they've got their kind of portal, their system there for you to go and challenge an account or dispute an account, you think they kind of put you through a process that's going to make it as easy for them to basically get around what you're trying to do. So there is a big difference between what we do in terms of us challenging accounts and leveraging different consumer protection laws. The way that we go about our process is we're holding the bureaus at the highest level of accountability to be able to justify and prove how they're reporting accounts on the credit report in accordance to the consumer protection laws. They're in violation of those laws. If we don't get a response back from the creditor through this process, if they're just not reporting things accurately, they have to either update it or they have to remove the account entirely off the credit report. And so what people will do is they'll go and they'll dispute an account. They're going to look at their credit report afterwards and they'll say, oh man, my credit score boosted up, however many points, 20 points, just from me disputing this account. I think I'm going to be mortgage ready now. They're going to go to you and you say, hey, yeah, it looks good, but you got to remove the dispute. And as soon as you do that, the credit scores are going to drop again, because when you dispute an account, it takes it out of the scoring formula, which all sounds great, but you can't get a funded loan with disputed accounts. So.
Right. A lot. And most people don't know that, but just don't dispute accounts if you plan on getting a mortgage. Because like you said, it makes, you got to get the disputes off, and then it just takes it to another level, bringing your score down again, because when it's in dispute, like you said, it's not being counted as a score. So, but that's why I said, I've never dealt actually with a credit company that does it the way you do it, the correct way. And I love the way you guys put in the business plan too. Good information, Brandon. So if anybody needs to get in contact with Brandon, you can reach out to him directly. eCredit Advisor, no S, ecreditadvisor.com, right?
You got it. That's it. Yeah.
Can I ask one question really
Absolutely.
quick?
Go ahead.
I heard that they're going to start taking unpaid medical bills off the report.
Yeah.
And when is that happening and how is it going to impact people?
Yeah, so I mean, I think that we're going to see a pretty significant impact for a lot of people out there. So most files that I look at, there's medical collections or medical debt on it. Now, the rules and the way that they're changing them, from what I understand, at least at this point and with what I've read, it's not going to take all the medical collections off a credit report, but there's going to be a fair chunk of them that fall within a certain category, a certain age of the account. And so I think a lot of people are going to see, and I think this is all going to start being implemented here in the summertime, I think in July from what I read last. And so I think probably July, August, people are going to start seeing changes in their credit scores, and their credit scores should start going up as a result of that process. It's a huge benefit to people. Absolutely.
Good to
That
hear.
reminds me, what about a lot of people I'm noticing now that they're self-reporting like their utility bills. You suggest that, is that good or not? Because what I see happens is, depending on when you pull their credit, if it has a balance on it, and like, let's say it's an FPL bill and it says your high credit's 249, your balance is 249.
Yeah.
So is that good or bad if they're self-reporting?
So I guess this is a little bit of a loaded question, because there's quite a bit to unfold in this, but basically the short answer is, if you add those accounts to your credit report, and let's say you've got bad credit already, you've got collection accounts and stuff like that, just because you add some of those accounts, it doesn't remove all the negative stuff. The negative stuff is still there. So if your objective is to try to build your credit scores, the best way to do that, hands down, is credit cards. And there is a way and a method and a system to that, the way that you use those accounts and getting enough accounts and being able to have them report in the right way that shows you as a responsible user of credit. There is strategy behind that. But if you're somebody who's really just trying to build your credit scores, credit cards are the way to go. If you do not have a credit score, if your credit score is too low to qualify for a credit card, then secured credit card is the way to go. And that's what those are literally for, is to help you build your credit scores so that you can prove that you know how to use credit. I explain this all the time when I'm doing consultations with people. The way that I try to phrase that is, and most people don't have enough open credit in terms of credit card accounts. And so we'll say, hey, you got to get some credit cards in order to build the positive side of your credit profile. You're not going to qualify for a regular unsecured, just a regular credit card right now, because the credit card companies are going to look at your file and say, it's too risky for us to give you a credit card with a credit limit, but we're not going to shut the door completely. What we'll do is we'll give you a credit card, with a credit limit equal to a deposit that you give us, called, a secured card. We'll hang on to that deposit. If you can show us that you know how to use that card, you'll get your credit scores high enough, then you can qualify for a regular unsecured card. There are certain credit card companies that will transfer you over to an unsecured account with the same account so that you keep a history on there. But basically then you'll go and you'll get some unsecured cards, and then you can get your deposit back for the secured accounts. And so those accounts are used as a tool to be able to build credit scores. But I think a lot of people look at them kind of like, or they get them confused with prepaid cards, which work in a different way. Prepaid cards do not report to credit, secured cards do. And so there is stuff to that, but if you're trying to build your credit scores, then credit cards are undoubtedly the best way to do that, for sure.
And is the 30% rule that they should keep with, if you have $1,000 line of credit,
Yeah.
keep it under 300?
Yeah, that as a general rule of thumb, for sure. Kind of the way that credit cards measure on a credit report is whenever you hold a balance on the card over 50% of whatever the limit is on that card, it's considered over leveraged and it'll drop your credit score. Once you're under that 50% threshold, it counts positively. And then it kind of works in a tiered way. The lower you get that balance, the better it is for your credit scores. So kind of the next tier is under 30%, which is where the general advice comes from. And then if you're really just trying to establish and build credit, really what you want to do is use your, typically we'll recommend you want to have 3 open active revolving accounts, use all 3 each month, put a tank of gas on all 3, and then pay them down to a $5 bounce. And what you're trying to do is to get that $5 bounce to report to the bureaus, because you're trying to show that you're under leveraged on the card. You have lots of credit available to you, yet you're responsibly managing those accounts on a month by month basis, which is why you have a small balance on it, as opposed to just paying it off and leaving it as $0 balance. Not necessarily good or bad. It's just, it doesn't show that you're actively using the card. And so it doesn't help your credit scores as much as if you leave that small balance on there.
That's interesting. Last question I have for you though, what about reporting rent?
Yeah. You can certainly do that. It's not something that we do in our program. There's other programs out there too, like ExperianBoost.com. Yeah, it's fine. You can definitely do that. It only reports on Experian though. So, there's 2 other bureaus you have to be concerned about.
Okay.
So, yeah, a lot of these things will help. Yeah, if you get yourself added as an authorized user onto a spouse's card, they've got great credit history, low balance, no negatives or anything like that. Yeah, it's a positive thing. You're probably going to need some cards in your own name as well, but all that stuff helps. Yeah.
Best thing to do is contact you
100%.
and put the plan together. That's real. That is just the truth. That's just the best way. That's why I like the way you guys do it.
Yeah, there's so many little things to credit, right? That just people don't consider, right, when they're looking at their credit report. And a little thing,
right? There's just so many things that you don't know. Like you said about the date of the last activity, disputing things. Like when people just try and figure it out on their own, it just gets worse. So, but really, that's good information. And I really appreciate you being on the show. We'll have you on again because we really can get in depth on credit.
Oh, yeah.
But for people needing to get mortgage ready, now's the time to do it. When you're having a hard time buying, you're still renting, and you've never bought before. Now is the time to fix your credit, put a strategy in place. We'll even take you and show you how to save money and fix your credit. So this way, when the market does eventually open up, people are ready to buy.
Absolutely. And we do free consultations for that reason too, right? Just to make sure everybody knows where they're at and put the plan together.
Fantastic. Yeah. Brandon, ecreditadvisor.com.
Great.
Thank you very much.
Nice to meet you.
Welcome. Thanks, guys.
Take care. Thank you.
Bye.
There's so many things, man, that I talked to him. I sent him like 5 clients in the last, and they're all happy. They like because like he puts a full plan into place. So this way, and he'll tell you right off the bat, it's not going to come off. Don't do anything with this. Do this with that. Fix this. Pay this down. I've been dealing with credit since '97, and I learned so much with him just working with him over the last last couple of weeks, really, I've just started working with him on with the clients that have, just seeing what they're doing. So
Well, that's
let's take a
amazing.
break. What's that?
I said, that's amazing to find somebody who can really do it right.
I never worked with a credit company like the way they do it. And like he says, they don't want to go more than 6 months. They want to
I
get it
know,
all done
I
in 6
feel
months.
bad. I've seen people years paying
Years.
$25 a month. I'm like, they're not helping you. They're not helping you.
Let's take a quick break and hear from, we got Blake Price from State Farm. Hang on a second.
I can't hear it, JP.
It's pre-recorded.
Yeah, I just couldn't hear it.
All right, we're back. That was Blake Price, BlakePrice.com, State Farm. He made a good point with not only people that are buying homes, but I don't know if you've heard about, there's about 11 companies that went out of business just recently with
I
homeowners
did.
insurance.
I couldn't
Yeah.
hear a word of that recorded interview. I didn't hear
I'm
any of it.
sorry. I got to figure out, I still getting this technical thing down. I want to make everything a kind of more of a smooth transaction. But he was explaining though about people that own a home right now, if you're being threatened to be canceled or they're raising your price, go out and get the WinMit and 4-point inspection. Have
Yeah.
that ready when you're shopping. So this way,
Yeah.
you can do that. And he said a lot of the people that are out scrambling now, or a lot of those, that's the thing when you go and you shop insurance and you go to State Farm and on Allstate, and then you go to this other company you never heard of, and they give you a really good quote. But then there's people, and that's what's happening. It's all those companies like that, these fly-by-night companies. And that's where people are scrambling. So that was good. It's good information for not only people looking to purchase, how important it is to get the insurance, because the insurance from people purchasing, how many times they get a client, they haven't even, they put in their contract that was accepted. They've ordered the regular house inspection and they haven't even had an insurance quote. And that could be, if you don't know if you need flood insurance, or if the insurance quote, if there's something, the roof is too old. And I recently had one where everything was perfect, and then they got the insurance quote and the house was not insurable because the roof didn't have 3 years of life left on it.
Yeah.
So
and
that's why it's important.
That's a real tough topic. I think I did 3 of them in the last year where the sellers put the roofs on. But nowadays the sellers are aware of it. They're not willing to put those roofs on. So when your agents are showing you those houses, before I even go look at one, I want to know how old that roof is. If it's at the
Smart.
end of its lifespan, I don't even want to show it, because if the seller's not going to do the roof, we've got a problem. And we can't do it later. It has to be done up front. They used to give you 30 days to do it, if the
Right, they
buyer
would give
wanted to do it, but they are no longer doing that now. So
Right.
it's a real important thing to look at.
Yeah, and the house, I asked him to, because it's got to be, some are 3 years, some are 5. So right in that range, you got to have at least 3 years, between 5 and 3 years left on that roof to be insured. So you're right. You used to be able to include it in the contract, even close on the house, and as long as that it was fixed within 30 days, they would do it. But now they're not doing that. And now especially, we got, what are we, 45 days until hurricane season starts again too. So
Yeah.
that's every time that happens, then
and then the other thing to urge your clients, and I do the same with mine. Once hurricane season starts, get that insurance policy bound. Even if we don't have a rough date, even if you started a little bit early, that's bound, you're good. If we get a storm, they'll shut everything down. So
exactly, if you're right. If you just have a quote, and once we're in the watch, I believe it is, that the watch or the warning, once you're there, that's it. That they're not going to bound you, and you might have to, then you might have to get a re-inspection on the property afterwards. So that is a good point to get your
if
policy.
we do have a storm, then it is a re-inspection. You can be delayed months on that purchase. So it's really crucial to be working with somebody that understands that advises you that.
Right, exactly. All right, our next guest is going to be Susan Greenberg from Doma Title. She's going to talk about, I'm not sure if you'll be able to hear it, it's pre-recorded. She's going to talk about vesting, because I get a lot of, when the client comes to me, they ask me how should I vest it, and that's not really on they always think it's how the lender, or whatever the lender says, and it's not. It's not on the realtor, the lender. It's the titles company's responsibility to explain all those different vesting ways, because it could be a problem years down the road. They titled the home wrong. That's what the vesting is how they title that people don't know, title the house. And especially, somebody, she tells us an interesting story in an interview about how like an 80-year-old and a 20-year-old bought a home, they didn't invest it correctly. And you would, in reality, think the 80-year-old's going to pass first, the 20-year-old passed first, and that caused a problem. So let me cue that up, see if I can do this correctly. And let's find her here. One. And this is going to be first part of a 3-part series too. So here we go. Having some technical difficulties. Just stand by here a second.
Okay.
Why?
You're not. I know.
Okay, that was Susan Greenberg, Doma title, with some interesting information on how vesting should work. And
Okay.
that was part one of you didn't hear any of it though, right?
Nope,
You couldn't hear.
I'm hoping the public can hear it. I couldn't even find the
No,
live.
I have the live feed going. I can see the live feed. It's going out. Okay.
Okay, good.
But yeah, I don't know why you don't see it. So we'll get it figured out. It's tough doing a lot. It's tough doing a live, everything live and moving it around, and um especially on pre-recorded things. So it's tough to do everything. But she brought up some interesting points about vesting, how the brother and sister. The one was 20 years old. The one was older. He passed away. They didn't have it vested correctly. It had to, they had to go through all kinds of things with the state. So it's very important that not only that you vest it correctly, but the names are spelled correctly. And it's done early in the game, because you can't be done, like if you come to the closing table and it's not right, it can't be changed, right there. So that's why it's always good to always deal with a good title company that's looking through the contract, making sure everything's right. They go over the vesting with the buyer, and they get it right. It's very important. The last guest I have is John Macarelli, Tidewater Mortgage, and he's going to talk about what everybody's talking about: interest rates, where they're at, how high, how high they become over the, since COVID. So let me pull that up for us and see if I can get this in one nice swoop here. Right. Well, apparently you're right. I'm getting feedback that they're not hearing they're hearing us, but not the pre-recorded stuff.
Okay.
So what I'll do is I'll edit the video and put it out, because the information, Brandon was good, because it was live, but the pre-recorded stuff, like you said, you're not hearing it. They're not here. I'm hearing it, but I don't know what's
The whole thing can be pre-recorded, the whole thing, and then you can air it live later.
I think
yeah.
that's the best. I think that's the best way to do it.
Then you
pre-record
can
it.
upload it to YouTube, always have it in your library, but then shoot it out there live also. But
Yeah,
we'll talk
it's a
about that. Mhm.
it's a work in progress.
I
But we got
understand.
some good content out today, and we'll continue to do it and put. I got next month. I got I got someone coming on for reverse mortgages. Another person coming on about talking about social media things. So that should be good. And I have a few other guests lined up as well. What I wanted to do though, because I mentioned in the titling that I'm going to give away a Amazon gift card. So what I'm going to do is I'm going to read, not too many people in the live feed. So what I'll do is I'll just because I want to do what I said I'm going to do, I'm going to give away an Amazon gift card. So I want to do that. I'm going to read a trivia question, and then the first person that, how should I do it? Should I have it, you know what I'll do to make it interesting? So this way we get, I'm going to do it for the recast. I'm going to read the trivia question, and the 15th person that emails me will win the gift card. So this way they have to email, and then, nobody knows who's going to be who, you know what I'm saying? So it's not like the first person, they got to listen to the 15th person, and I even can do it like we did yesterday with that live feed. I had a good time yesterday. Did you?
Yeah, it was fun. It was really
I
nice.
thought it was great. So like I did it yesterday, I'll do the same thing. I'll record and go right down to 15. So I'm going to read a trivia question. So people that are watching this on the recast, the 15th person that emails me the correct answer will win a $30 digital Amazon Amazon gift card. So my wife came up with this one. What movie features the line, "The human head weighs 8 pounds"? So the 15th person to email jp@jpfirst.net will win the digital gift card.
I
Again,
think I know what it is.
what movie features the line, "The human head weighs 8 pounds" for a $30 gift card? Whoever is watching this on the recast, email jp@jpfirst.com. Today we had Rebecca on as my co-host. Thank you very much. This is Rebecca Giacobba with Gia Realty Elite. Gia Elite Realty, right in Juno
Of
Beach.
EXP Realty. Gia Elite is my team name, but I work for a large national company. Yep.
Got it right here. Can we see that?
Yep.
Can you see EXP? EXP
Yes.
Realty. That's Rebecca. And I'm JP. I do all the loans. Contact JP First, jp@jpfirst.net. Call me 844-JP-FIRST, jpfirst.net on the web. Rebecca, it was a pleasure as always. Have a
All
great
right.
weekend.
Happy
Enjoy your
Easter to you and your family.
Happy Easter to everybody too. Thank you. Good
All
night.
right. Bye.